Thank you, God, for the opportunity to make another video. Welcome back to the MoneyPot Channel. It is your host, Elijah, back here in action. Beautiful Monday morning we got. We got a lot to talk about and what's going on in the economy and what I foresee happening in our economy, to our economy, and with our economy. Let's get into the video. The MoneyPot is a library of educational content curated from a God-first perspective. The content provided is designed to improve viewers' knowledge of world economics, events, cryptocurrency, and much more. In no way, shape, or form is the information provided on the MoneyPot channel financial advice. It's a beautiful day. As we take a look at where the markets are ending out on Friday, we see that the stock market is at its highest week since 2020. Boy, that's very interesting. We are at the top. Where can you go from the top? You can only go lower. It'll be interesting to see where the stock market goes this week. We got some interesting information to talk about in regards to stocks and really just the whole equities market. And when we see European stocks are up and had their best month since November of 2020, up 6.3% in July. I bet Christine Lagarde is happy. She's appeasing people for right now. And I bet, Jerome Powell, he's happy for the day. But listen, I don't foresee these gains staying in the stock market for long. I truly do not. And that is what we need to get into, okay? Literally, the commodities market is up. We see gains up to 102 cents, up 6% this week. Everything is up.
Run.
With everything up, it just makes me think that we done pumped too much money in the system and there's going to have to be a correction. Literally, Bitcoin's almost at 23,000. I really foresee here in quarter 3 and quarter 4 us having not a soft landing and really consumers having to pay the prices that, a recession would bring. And we're going to see demand slow up in many of the markets. And I'm nervous. I'm nervous about August and September and wrapping up the year. I'm a little nervous. We see here, stocks are now massively overvalued relative to treasury bonds. In a recession, stocks will underperform bonds by a minus sign. So there's a huge difference in what we're seeing in the bond market and in the stock market. And when there was the initial pandemic crash, the stock market gave up all those gains. And the bond market rallied quite a lot. And essentially, on a soft landing, they perform the same. But on a hard landing, there is no comparison. And in this graph, we are seeing no comparison. We are seeing the stock market at a high. And we are seeing the bond market at a low. Very interesting. Are you liking this video?
You like that? You like that?
Well, make sure you go like this video. Subscribe to the MoneyPot channel. Make sure you turn on those post notifications. Check out some of my past content and let me know what you think about it in the comment section below. We see here from one of my favorite economists, his company Real Vision, talking about how we are in a technical recession. So what now? How long will it last? Is it sharp and short or shallow and drawn out? How do you position for it? And we see him talking here with the CEO of Rosenberg Research and Associates, David Rosenberg, and they're basically talking about how they see this recession not being short-lived or soft potentially. So let's take a listen to this video.
Well, we are in the early stages of what is probably going to be a 2-year recession. So that's where I think we are right now. And the beauty about this call is that it is separates itself from the consensus view that we're going to experience a soft landing, or a short and shallow recession. It could be shallow. It's not going to be short. That's where we are.
So, yes, I'm talking about a problem, but now it's time to talk about some solutions. What the frick can we do with our money to be able to create as soft as a landing as possible for this recession? Well, first, make sure that you have your emergency fund set up, because emergencies are going to be a little bit more frequent in a recession. And make sure that you have your investment strategy together. If you don't know how to put together an investment strategy, go check out some of my past content on how to create an investment strategy. And let's talk about one of the more important assets that I believe that will be vital to have in this recession. And that is precious metals. We see here, Rich Dad, Poor Dad, a very reputable businessman and investor, talking about what is the best investment value today. He says A, silver, gold over 17,000, and silver falls to $20. I do not touch paper gold or silver ETFs. I only want real gold or silver coins. Silver is an industrial precious metal. Gold is not. Do not take my word for it. Study precious metals. Interesting. Do your research. Precious metals have a lot of value. We see they have industrial value, and then gold with its store value and how it's been traded for thousands of years. And then we see here talking about the gold-silver ratio. It's the oldest tracked rate in history. For the 20th century, the gold to silver ratio was 47 to 1. 47 ounces of silver equals 1 ounce of gold. And today, it is at 85 to 1. 85 ounces of silver for 1 ounce of gold. Why I suggest buy silver? Because for $25, everyone can buy a silver coin. Don't take my word for it. Study. Become rich. Don't be a fool. Study. Become rich. Don't be a fool. Wise words from Robert Kiyosaki. And then we see here Robert Kiyosaki talking about the bond market crashing, which is has been the biggest bond crash since 1788. Oh my gosh. That's hundreds of years ago. China's bond market is crashing, and there are over 90 million empty condos in China. The real estate market is crashing in China, and the bond market is a lot bigger than the stock market. I think this is why Robert Kiyosaki gives the investment suggestions that he does, and what he's talking about he is buying is literally what I am buying: precious metals and cryptocurrency. I don't fool with Bitcoin, but precious metals and cryptocurrency are going to be vital assets to have in this recession. I personally believe it is time to get off of things that are associated with the United States dollar. That includes the equities markets, bonds, and stocks. Now, does that mean that I don't, have my Roth set up and maybe a money market account? I do, but I don't have faith in those accounts. I really don't. I'm just being. As I wrap up this video, I want to talk about two concepts that I believe it is important for us to include in our thought process when we are thinking about our money and finances and the economy. First off is not moving how everybody moves with their money, and taking an in-depth analysis and not being afraid to learn about investment vehicles that typically not everybody talks about. And the second one is watching what the frick banks are doing around the world. Go check out my past content on that notion of watching what central banks are doing. But seriously, banks move the majority of the money around the world, and they really can dictate how an economy grows or slows. Now we see here, Idyllic Finance, buy stocks when they're 20% down and everyone says you're getting scammed. But you buy a new car and lose 20% right off the line, everyone congratulates you. Society programs you to be poor. We have so many misconceptions about personal finance that we have to get rid of. And that is why I'm putting out this content here on the MoneyPot channel, because it is important for us to realize that we are programmed to be in debt for the rest of our lives, and we are not programmed to create generational wealth for our families. With any sorts of market investing, when you buy low, you sell high. When things are really low and there is blood in the streets, like John D. Rockefeller talks about, that is when the biggest gains can be realized. And we have to beat that into our heads and not allow for fear and instant gratification to be our deciding factors. And we see here this all the more real in regards to watching what institutional investors are doing and what the mainstream investor is doing. We see individual investors through 2022 have poured $25 billion a month into the markets at record levels. Wow. JP Morgan says institutional investors have moved $258 billion through July 5th of this year. That is a stark difference, comparison. You see hot and then you see cold. The institutional investors are extremely bearish right now, and us retail investors are really bullish. That is a problem because institutional investors have more money. They are the giant whales that can buy up, like 10% of a Ripple or a Stellar Lumens. They have the money to really change the market. And that is why I believe that quarter 3 and quarter 4 are going to be rough. And we're going to realize that we are in a recession, regardless of what kind of definition the White House wants to put out. We are going into a recession. It's going to be rough. Might be rougher than 2008, if we're being honest. We see here this analogy. Just is rough to look at. But the number of weeks from start of a bear market, we're currently at right around the time when the 2008 bear market started to hit, around 61 weeks. And we see here that, the conception is it's just a correction. No recession is in sight. Buy the dip. But then, you have I guess you can call it a black swan event where Lehman Brothers, they realize that it's a bear market. And then everyone is having to deal with the fallout in this bear market. And that's when things get rough. So we've got about 30 weeks or so left for this graph to see how this graph ends up. It'll be interesting. I'll be staying here tuned into the market. 30 weeks put us at about quarter 1 of 2023. So we'll just have to see. I don't see it being a happy-go-lucky quarter 3 and quarter 4. I truly don't. But I just listen to the experts. The ones that have market experience, that have been through recessions, that have, invested and made millions and billions of dollars, and they know what they're doing with their money. I encourage you to listen to them. Listen to me too, because that's who I listen to. Don't be like the mainstream investors. Get your own strategy together and really look long and hard on what is going to have value over these next 3 to 5 years. I hope that you're able to find this video informational, beneficial in some way, shape, or form. Share this with a loved one and, just get the message out that, we are in a recession, but we can strategize and create a portfolio that will appreciate over these next few years. Like, dislike, share, subscribe, do what you do, but I appreciate you. Until next video, stay blessed, stay healthy, stay prayed up. Peace.